Ladies and gentlemen, good day and welcome to the Q4 FY23 conference call of Nirlon Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Good evening, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Nirlon Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and financial year ended 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Rahul Sagar, Chief Executive Officer and Executive Director, Mr. Kunal Sagar, Promoter and Non-Executive Director, Mr. Manish Parekh, Chief Financial Officer, VP Finance, Mr. Jasmine, Company Secretary, Vice President and Compliance Officer, Mr. Ashish, VP Business Development and Investor Relations. Without any further delay, I request Mr. Kunal Sagar to give his opening remarks. Thank you.
Thank you, Purvangi. Good evening, everyone, and welcome to our earnings conference call for the fourth quarter and financial year ended 2023. Let us first take you through the financial performance of the company. For the fourth quarter of the financial year 2023, the company reported a total income of 149 crore rupees, an increase of approximately 7.8% on a year-on-year basis. EBITDA stood at 117 crores, which grew by 3% on a year-on-year basis, representing an EBITDA margin of 78.72% for the quarter. Profit after tax stood at 50 crores, witnessing a growth of approximately 34% on a year-on-year basis. Profit after tax margin stood at 33.47%. For the financial year ending on 31st March 2023, the company reported a total income of 576 crores, witnessing a robust growth of approximately 49% on a year-on-year basis. EBITDA stood at 461 crores, which grew by 54% on a year-on-year basis, representing an EBITDA margin of 80.09%. Profit after tax was 158 crores, a growth of approximately 43% on a year-on-year basis, and the PAT margin was 27.43%. On the operational front, for the current quarter, that is the fourth quarter of financial year 23, the average occupancy of the company was 98.5%, and as on 31st of March 23, approximately 14,000 square feet area was vacant. During quarter 4, financial year 23, MUFG has licensed approximately 23,000 square feet, and Integrated Security Media Group has licensed approximately 12,000 square feet. Also, in quarter 4, 2023, Proteum Finance expanded their space at NKP by licensing approximately 34,000 square feet and will be vacating smaller areas of approximately 14,600 square feet during quarter 1, financial year 24. ICICI Prudential has signed an LOI in Q1 financial year 24 to expand its space at NKP by 9,600 square feet. Finally, the board has proposed a final dividend of rupees 11 per share for financial year 23, subject to approval by shareholders at the forthcoming AGM. This is in addition to the interim dividend of rupees 15 per share that was paid in Q4 financial year 23. With this, we conclude our presentation and open the floor for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star then two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and one to ask a question at this time. The first question is from the line of Rajiv Malhotra from HCPL Parts Company. Please go ahead.
Good evening, team. I think these are fabulous results, and let me congratulate you of running one of the best stabilized listed real estate companies in the country. 2 or 3 very small points. One is that the loan which our company has taken from HSBC seems to be relatively quite expensive, seeing the stabilized nature of the cash flows of our company and the pedigree of the ownership, which is, I would say, close to government ownerships. Would you like to comment on that? Is there any specific reason for such a high rate?
We had refinanced this loan back in May of 2022. We had HDFC as the lender then, and we financed with HSBC because our interest rate at that time was in the region of about 6%. The HSBC rate is linked to the T-bills, which have of course gone up in the last year, and therefore the rate is today, as per our contract with HSBC, 9.11%. That's the context for the current rate being what it is. We will of course watch this carefully to see how the rate macro environment moves on rates, and then take it from there in terms of what we see, which way we see the interest rates going, and whether it's worthwhile looking at further discussions with them on this matter.
Because I'm sure that you can easily chop off 80 basis points without doing too much effort, unless your documentation with the bank prevent early repayments or the penalties are prohibited. Secondly, the way we have restructured our taxation, our loan repayments, and our depreciation method, one that is getting us a great dividend, so thank you for that. But this would be a question in everybody's mind. Are there any plans of REIT, micro REIT, joining a REIT, etc.?
So we've been discussing and the restructuring for some time, as you know. We've discussed in our earlier calls also. And as regards the potential for restructuring at this point, we are continuing to engage with our major shareholder, and we are working through various required clarifications so that we can come to a conclusion as soon as possible, as soon as practical.
Okay. If I could squeeze in a last small question, what could be the 2 biggest challenges Nirlon is seeing in the future when we are talking of all this work from home, etc., etc.? So let's say from the CEO's position, what is the 2 biggest challenges Nirlon is seeing right now?
Well, the biggest challenge, so to speak, would be that now that the park is, we've completed the development, we have completed the total development of the park with an existing FSI of approximately 2.6 and with approximately 3 million plus square feet of chargeable area, predominantly at 80%. I think the most important thing to maintain the level of the license fees and to grow the revenue of the license fees would be to continue to have the right profile of licensees who are paying an appropriate rent or an appropriate license fee, and basically to try to see that we get the right people and continue to be at 100%, because this is of course what is driving the result is really the top line of license fees. And if we can continue this at 100% with the right people in NKP, then I think we see that as the biggest. We see that important thing we'd like to fulfill as a management.
Exactly. The quality of the cash flow, the quantum and rate of the cash flow, and the level of occupancy, all three of which we have to find a balance to maintain and keep increasing.
Yeah. So it's heartening to know that physical occupancy of offices or work from home is not bothering you at all at this moment.
Well, no, it's of course it's something which we like to monitor very carefully, but we feel that with the above 2 or 3 points we mentioned, with the right profile of licensees who are paying an appropriate rent, which is appropriate for us as well as appropriate for them, we feel that is the best way to ensure that work from home does not put any undue stress on the level of occupancy in or the level of vacancy in NKP. So yeah, that's really what we want to focus on. We want to continue to focus on.
Thank you so much for your answer.
Thank you.
Thank you. The next question is from the line of Satinder Singh Bedi from Eon Infotech Investments. Please go ahead.
Yeah, thank you for the opportunity and congratulations on a stable set of numbers. My first question is around the demand outlook in the micro market and around the upcoming Morgan Stanley vacancy, which I believe is December 23. So there's a slide which talks of advanced discussions for 320K square feet. So are we talking of an internal client, existing client who is looking to ramp up, or is it outside? So around this demand and Morgan Stanley and the inquiry that we have.
The 320,000 square feet in advanced discussions refers to one of our major renewals for 2023-24. Does that answer your question?
There's a mention of advanced discussions for 320K. Probably this is a refill of the upcoming Morgan Stanley vacancy. So the slide 5 talks of this advanced discussions. Probably we have some advanced discussions going on for utilization of the 450K, which is coming up for expiries in this year.
Out of 449 or 450,000 square feet due for renewal in 23-24, one of the clients, a single client, is due to renew 320,000. That renewal is coming up. That's the one that we are in advanced discussions with.
Okay. So where does the Morgan Stanley stuff come in? Because 449, if we are talking of 320 for some other client, Morgan Stanley itself for 345. So where does that fall in?
Morgan Stanley is an existing licensee in NKP, and
just to be clear, the 320 is not referring to Morgan Stanley. It's another client.
Morgan Stanley is also an existing licensee in NKP, but what you're referring to is concerned with somebody else.
Okay. So what you are saying is that because FY24 talks of only 449, out of which Morgan Stanley will be about 345. So this means we are talking in advanced discussion.
We don't know where you're getting the 345
number.
Yeah, the 345 number we don't have. There is no Morgan Stanley renewal for 345 in financial year 23-24.
Somebody else will speak.
The Morgan Stanley issue is a separate one where there is a scenario where they intend to migrate to another building at some time in the foreseeable future. So that as we mentioned a few times on earlier calls, that time frame is something that Morgan Stanley will let us know. We discussed with them to give us the longest possible time frame and requested them also to try and see that the migration is done in phases and not at one time. Frankly, at this point, whether this will begin in 23-24 or 24-25 is something that is open and something that we are discussing with them. It depends on when their building is ready and when they move.
Yeah, and to answer your first question, how do we see the demand in the micro market? We see the demand in the micro market as fairly positive. We should also keep one thing in mind because of the level of our vacancy, which is plus minus zero. We may not be getting the full range of inquiries in that much of detail, etc., because everybody really knows, or the IPCs who generally are responsible for renting the space to the prospective licensees are aware of the fact that we have no vacancy at this point in time. So while we do receive some inquiries, yes, we may not be receiving the full range of inquiries, but what we see, which is based on the limited inquiries that we get, is that the demand is, I'd say, fairly positive.
And we remain very cognizant of the Morgan Stanley situation, and we will, of course, address it.
Right, so no, I think that's very clear. So on the physical occupancy, so how has it moved over the last quarter? Last time it was mentioned that we are looking at typically about 60-65. So has it moved upwards from there, or is it more or less stabilized, including phase 5, so the entire premises?
So phase 5 is still not yet, JPMC has not yet moved in to that extent. The last stage of the fit-outs are going on, and they should start moving in gradually in Q2 23-24. With regards to the physical occupancy, it's a very important point. And we can say right now that excluded JPMC, we are at about 65 to 70%. There are, of course, some companies which are a little bit more. We see this at approximately 70% fairly consistently now, and we hope it continues to stay strong, and we hope it continues to increase.
In general, the trend continues to be positive. There are days when we see as many people as we had in pre-COVID time. Some days are lower, but in general, that the occupancy aspect is something we feel positive about.
Right. Thank you. I've got a couple of small housekeeping questions. I'll come later in the queue this time. Thank you.
Thank you. The next question is from the line of Ashok B. Jain from Ayush Capital. Please go ahead. Mr. Jain, I have unmuted your line. Kindly proceed with your question.
Hello.
Yes, sir. Please proceed.
Yeah. Thanks for the opportunity. So my question is regarding what we had mentioned in the last con call. In the last con call, you had mentioned that despite positive news flow in the terms of government push incentives around micro REITs and REITs in India, the ground realities of the same were in dark. However, post your last conference call, there has been a lot of major micro REIT, fractional ownership, REIT announcements coming from SEBI. So I wanted to know your thoughts on whether Nirlon can convert to a REIT and stay listed, or we are continuing on the same path which we had taken during the last con call. So this is my first question, sir.
Mr. Jain, the information and advice we have so far is that a listed entity can theoretically become an SPV under a REIT, which is also a listed entity. There are no precedents or ready framework for essentially converting to a REIT, as we put it. The step has to be that one first delists, and then post the delisting, whatever one wants to do with the company, whether it's REIT or something else. A two-step process is what is followed in if someone is going to become a REIT. We had mentioned this in the last call as well.
Yeah.
So that remains unchanged in that sense. There's no conversion as such that is possible on a practical level directly to a REIT. As regards to your other point about the various changes that have taken place between last time and this time, yes, there has been back and forth on the REIT regulation. We are keeping fully abreast to them. So to the extent whatever will be applicable to Nirlon, of course, we will make sure that we understand that or we have understood that and we take it on board.
As of now, we are open to this regulatory changes, I suppose.
So depending on what and which way the restructuring finally proceeds, whichever regulation at that point is applicable, of course, we will make sure that we are fully briefed on that or fully aware of that, depending on which one of the changes or which one of the regulations is applicable. As we said, we are working through with our major shareholder. We work through whichever clarifications are required as regards this potential restructuring. So we are trying to come to that conclusion as soon as possible on it.
And for the last question, sir. So as per an interview published in Business Standard on March 5 this year, the CEO of India Business Park Division of Capital Land, that is Clint unit of Capital Land, Shri Gaurav Shankar Nagabhushan, he asserted that Capital Land intends to double the reasonable IT office space portfolio in India. To this end, they intend to acquire 5-6 million square feet inorganically. Since Nirlon Limited is eligible potential acquisition target for Capital Land, is there discussion with the Capital Land investment on the anvil, sir?
That really is a question that is more a shareholder level related question than a question that we would answer over here, because it's really a shareholder to shareholder discussion, if at all there is any such thing. We are not, there's no discussion as far as we know along those lines, but that's not a company level question, it's more a shareholder level question, if we may put it that way.
No, but you also belong to the promoter shareholder level. So in spite of being a minority holder, you also belong to promoter shareholder. So is it on the anvil or can we discuss it post Concall?
Hello.
Mr. Jain, can you please repeat what you just said?
Yeah, sure. Am I clear now?
Yeah. So you are asking whether we are privy to any discussions on Capital Land. The answer is no, if that's your specific question. If it's not, do ask your question again.
No, it's the same question. That is, we are not in discussion at present. You from the promoter side of Indian promoter?
We won't want to comment on, we don't know anything about any discussions with Capital Land. That is a statement that you are making that Nirlon is a potential perhaps acquisition target, as it were, for Capital Land. But then we are not, that is something that you are mentioning. That's not something that we have any knowledge about or that we have been discussing at least.
No, sir, this is not my guesswork. This was published, it's in public domain. And Shri Gaurav Shankar Nagabhushan, he was at that time, March, he was the CEO of Clint part of Capital Land, and he told that they want to acquire this 5-6 million square feet inorganically and grow the business of India to double the level.
Sure, but that doesn't necessarily mean that he's referring to Nirlon or what he's referring to, right?
No, he didn't name Nirlon, but any talks with Nirlon, this is what I'm asking.
Not that, as I said, not that we are aware of anything along those lines. Not at all.
Okay. Thank you so much, sir. That answers my question. Thanks a lot, sir.
Yeah. Thank you.
Thank you. The next question is from the line of Rikesh Parekh from Rockstead Capital LLP. Please go ahead.
Thanks for the opportunity and a good set of numbers. The first question is regarding our phase 5 JP Morgan leasing. So since they have not yet occupied fully, are we billing them at the full or there is some till the time they occupy, we are partially billing them?
The license for the legal license agreement for phase 5 actually began on December 15, 2021. There were 5 months of rent-free up to May 15, 2022, and since then they are paying the full license fee. So that is the answer to that question.
Thanks, that helps. Second is, just want to understand what are the current leasing rate what we would have negotiated in the Q4 means in the last year, what we would have done?
Yeah, you mean the actual rental?
Yeah, range probably if you can give or.
Well, I mean they are actually the numbers are basically in the range of approx 145 to 155 at 80% efficiency, and usually in these cases there are 3 to 4 months of rent free. Usually, sometimes the rent frees are spread out over 3 to 5 years. Sometimes the rent frees are upfront in the case of the new licensee. So that's the range in which we are in now.
Okay, that helps. And just in terms of the property, this leasing update, you mentioned we have signed 9,600 square feet. So the vacancy, what we talk of 14,000 at the end of the year, so we should be reducing that. That is over and above now, or we have included that as well.
Vacancy, what we are talking of 14,000 at the end of the year is not really related to office vacancy in NKP. We have it includes some parts of Nirlon House, which is the building which is partially owned by the company at Worli, and it includes some amenity areas in NKP as well. So no real office area in that 14,000 in NKP, so to speak, to answer your question.
And the last, any asset, something balance available now for development, or we are done with fully, more or less?
We are done with what? With
FSI at Nirlon, NKP?
No, FSI is available. Theoretically, FSI is available because we have used currently approx 2.6 FSI, and then, so yes, there would be balance FSI available.
But there are no plans to utilize it.
No plans to utilize.
Okay, thanks. That's information.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Harshit Buletra from Flair Investment. Please go ahead.
Hello.
Please proceed with your question, Mr. Buletra.
Yes, madam. Am I audible?
Yes, sir.
Yeah. Hi. Good afternoon, everyone. Thank you for the opportunity. Sir, we are paying a tax of 35% by letting 26 rupees dividend. Correct, sir? In the hands of every minority shareholder as of today. So why don't we take a decision to convert into a micro REIT, or if we are in talks of that, or if you cannot answer, I request you to kindly make some key persons on GIC sit in the Concall so that we can get our answers cleared.
Noted your point, Mr. Buletra.
Yeah, because this it's been noted from quite a long time, but it's not been answered any time, sir.
Yeah, noted.
Why don't we? What else? How do I ask you, sir? Like any other way to ask you? Like, am I not asking you like properly or something like that?
No. Your point is noted. I appreciate your asking it. You are asking for clarity on the restructuring discussions that we've been having. All we want to mention is that would be at things of repetition to mention that we continue to have and engage with GIC in very serious and meaningful discussions on the matter. We are trying to come to a conclusion on this as soon as we can.
I know. Like it's a quite long time taken from our end. Like it's a little disturbing to the minority shareholders. It's a win-win situation for the GIC, the majority shareholders as well as the minorities, to convert into REIT. That I don't have to make you understand. And today, seeing the scenario, Nexus coming up with the IPO of REIT, and there are many other companies like GIC. We don't have to teach them about REIT. It's just time consuming from your end, or I don't know what are the discussions going on. It will be very good on your part if you throw some clarity, so that I don't disturb you on every con call like this, sir. Like, I don't want to disturb you. I hope.
Mr. Guleta, the only point we would like to just mention here is that, as we had said earlier a few times, this conversion to a REIT is not something that is either practical or something that is being looked at, because that's not something that on a regulatory basis is something that is practical to do, frankly. That's the only point we would once again request you to take on board, because whatever restructuring is being worked on, we are not working on anything that converts us directly to a REIT. It doesn't.
I agree.
The framework doesn't allow one to do that. So it has to be done in a step-by-step manner, and that's the process that we are working through, as we explained.
No, the only option now, according to your statement, it says that only I have to give you time for delisting and then convert into the SPV or something like that. Can I take it in that way? Wait for the time for delisting?
So, as we had mentioned, the potential steps that can be followed would include a delisting. And then what happens after delisting, again, is up to the acquirer to decide. That doesn't include minority shareholders at that point, right? In case it is a delisting option. So we won't want to speculate as to what will happen beyond the delisting. Of course, the option to do a REIT may or may not be available at that point in time, but that is what the person acquiring in the delisting has to, or the entity acquiring in the delisting has to be clear about in terms of what their plans are.
No, so I don't want to know their plan. I'm fine. So that the lines what we are into delisting. So unnecessarily we are paying taxes. Like our company is paying taxes, we are paying taxes. I just wanted to understand that, because we are wasting a lot of time now. So the delisting is the appropriate step which we should be taking sooner or later, if I'm not wrong.
We won't want to speculate on whether we are doing A or B. Delisting is a possibility, as we've discussed various times, but that's one of various things that is being considered, and that's something that we will know whether it's possible to do it or not possible to do it as soon as we can. I think we've now mentioned this many times, and we'll continue to work on getting an answer on it. So we request you to take this on board at the moment and bear with us, please.
Sure. Okay, sir. I'll stick to that. Okay. Thank you.
Thank you. The next question is from the line of Rajiv Malhotra from HCPL Parts Company. Please go ahead.
I'm sorry, I really don't want to repeat any of these discussions which happened earlier, but something did come up. We've been working with REITs here and in Singapore for over a decade and a half now, as an investor, of course. The question is, would you know if Nirlon, let's say part of Nirlon, or let's say any other company, can become a part of a REIT partially?
Malhotra, we wouldn't want to really speculate on that, if you don't mind, because that's a very it's a powerful question, and that it doesn't really give us or you any context in terms of giving you some kind of off-the-cuff answer. It's a much more involved process, as you know.
No problem. I'll let you rest. Thank you.
Thank you. The next question is from the line of Dilip Jain, an individual investor. Please go ahead.
Hearty congratulations on a good set of numbers and consistent dividend. I have no queries, sir. Thank you.
Thank you. We have the next question from the line of Satinder Singh Bedi from Eon Infotech Investments. Please go ahead.
Yeah, thanks for the opportunity of a follow-up. I believe the annual valuation exercise would have happened in March. Okay, so I just wanted to understand how the cap rates and discount rates have moved as per the valuer between this 31st March and the 31st of March 22.
Mr. Bedi, what is the valuation exercise you are referring to? Sorry, we're not familiar with what you mean.
The annual valuation of the investment property. So I'm assuming we get the annual valuation exercise done.
We don't do any kind of publication, or we don't publicize any kind of valuations. So we don't put that out. We don't put out valuations in the public domain in a sense. So,
Mr. Sagar, I think that's a part of the annual report. So last annual report, there's the value mentioned about 4,300 something crores. Okay, last year. Okay, so okay. I think that the evaluation is an annual exercise in investment property. And
sorry to interrupt, Mr. Bedi, your voice is breaking. Could you please use your handset to ask a question at this time?
Okay, yeah. Is it better now?
Yes, sir. Please continue.
Okay. So,
what we understand, you are referring to the valuation in the annual report, and you are saying what it might be in the current report?
Yes, the valuation as of 31st of March, how has the valuation changed, and what are the cap rates and discount rate movements over the last 1 year while valuing?
March 21.
Can you hold on a second, Mr. Bedi?
Yeah.
Mr. Bedi, thank you for your patience. So, we will be putting out a valuation in our annual report for 31st March 23. It's not yet something that is in the public domain, so we won't speculate on it on this call.
Okay.
But do refer to the one for 31st March 22, which you've already mentioned.
Yes, which we are aware of. 4,357 crores is the valuation done as of 31st March.
Yes, so sorry, that was my error, and apologies for mentioning that it wasn't there. Thank you for pointing it out.
Yeah, what's the figure now? But 31st March 23.
That will come in the annual report.
Okay. We'll wait. So another question. All property companies typically, both the REITs and the other listed entities normally talk of a metric called the mark-to-market opportunity. This attains even more significance for a company like ours because the development potential is already fully used up. Okay, so we wanted to understand, and like you mentioned in an earlier answer, that the future challenges revolve around the right profile of licenses and the quality of cash flow. So what is the mark-to-market potential that you see on our current leases? So what's the market rate today for our kind of property versus what we are averaging?
So maybe again, it would be a little bit speculative to answer because most of our licenses now are reasonably close to market. There are some that towards the end of that tenure may be significantly above or significantly below market, but we don't benchmark it in that sense at all. We look at what we can get going forward from there. But I think the correct way to look at it would be to say that significantly we are now at a situation where most of the leases are in fact largely at the mark-to-market situation. It's not that there's a massive arbitrage upward or downward in this case. Does that help?
Yeah, very clear. Okay. And so since now we have a fully completed project, okay, the only expenditure probably is some maintenance capex that we keep on getting incurred. So just wanted to understand what is the typical level of maintenance capex that we are looking at on an annual basis, and do we create a reserve for the same, okay, as a percentage of revenues, let's say? So how is this handled, okay?
We have a budget for capex every year, as well as a budget for our non-capex repairs every year. The repairs budget forms a part of our profit and loss budget for the year, and the capex budget is a separate budget, so we earmark cash flows for that. Normally, in the last 2 years, it's been roughly between 10 and 15 crores a year.
Okay, 10 and 15 crores. Okay, fine. Thank you very much. Just one final last feedback, sir. As others would have also mentioned, I think you are running a very fine business. Do something about the restructuring. It's been going on for quite a few quarters. Okay, so for such a fine business, I think it'll do justice to the opportunity that exists for everyone. Okay, thank you. Thank you all the best.
Thank you for your vote. Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question at this time. The next question is from the line of Laksh Jain, an individual investor. Please go ahead.
Hello. Am I audible?
Yes. Mr. Jain.
Yeah. We make an EPS of 6 quarterly, that is 24, which is equal to 216 crore of cash. Right? And we have a depreciation of 35 crore quarterly, which is equivalent to 140 crore. So 216 crore plus 140 crore is equal to 356 crore, which is equivalent to 40 rupees of cash per share. Hello?
Mr. Jain, sorry, we didn't understand. What is your question?
Yeah.
I'm just trying to give you the number of cash which we actually generate. It is coming to 40 per share. Is that right? Like my numbers?
You have to deduct tax also to arrive at the net cash per share, please.
Yes, it's after deducting cash. The 6 rupees EPS is like after deducting cash, right?
So tax.
Are you talking of Q4? Are you talking of?
No, I'm talking about like the end, which is going to happen. Like it's going to be the same, right? Not going to be much of changes. Like 6 rupees of EPS.
Sorry, I'm a little confused. You're talking about EPS?
I'm just trying to get the figure of cash, sir. Exact cash how much to generate.
Okay. So you're looking at that Q4. You're looking at slide number 10.
Exactly. Yes, sir. Just wanted to check my calculation whether my reading is right or not, sir.
So on a cash flow basis before tax, our cash generation is approximately about 300 crores for the last year.
Yes.
Okay. Before tax.
Yes, and so it's 300 crores, right? It's coming to 447 crores. Before tax.
I don't know. We don't know what numbers you're referring to. So I'm giving you the general. If you want the cash number, that's the one we have here. About 303 crores of cash before tax for the year. Let me just check with our CFO. I'll check with our CFO again, but just a minute.
You're referring to the.
No, I'm not getting that figure at all. I just want to know the cash which you generate.
Just to answer your question, I think you're looking at the numbers from the P&L. To arrive at the cash, you need to then also adjust the routine capex, working capital, etc. So you are doing PAT plus depreciation. There will be a number of other items which get reflected in the cash flow statement.
Yes, sir. Right. And this 85 crores which we did in this investing from activities, like will it continue to happen?
Sorry, I'm not able to. Your line is a little bit not so clear.
Hello. Now is it clear?
Yeah. And what is this other number you referred to?
85 crore of investing activities which we did.
From the
So can you tell us where this number is, please? Because
cash outflow from investing activities of 85 crore for this year, FY23.
so that's in your
22 balance.
Cash flow from investing activities.
Are you referring to last year's annual report?
No, this is today's result I'm talking about.
Sure. Just give us a few moments. We'll come back to you.
Yeah.
In the meanwhile, we can take other questions, please.
Okay. I'll move on to my next question then. So when will our repayment of loans start, sir? The amortization of loan repayment?
The repayment will start after 5 years. So that is
You are not audible, sir.
the repayment will start after 5 years.
Okay.
At the rate, and we have to pay back approximately 5% every year, and then after that there is a bullet payment.
So 25% between years 6 to 10, and then the 10th year 75%.
Yeah, exactly.
Okay, got it. And one more thing. Okay, so this I suppose this 30 crore of interest which you paid this quarter is peaked out, right? There is like no more chance of increasing, right?
So what
are we already seeing some downfall in interest rate?
No, you're talking of this
Finance cost, 29 crore.
Of the finance cost of 29.3.
Yes.
Okay, so what is your question?
I suppose it peaked out, sir, or do we expect any increase from the quarter one?
No, that's really based on the interest rate that was there in Q4.
So we haven't seen like any fall, like in the last 2 months.
So eventually, there's been some increase in Q1.
Sir, I'm sorry, but it's not very clear, sir.
No, I know. Yeah. Okay.
The voice is not.
Based on the increase in the interest rate in Q1, there may be a marginal increase in that number of 293.
Okay. And currently it is at 9.11%, which you just mentioned.
Yes.
Okay.
Now just hold on a second. You had asked us the question about the 85 crores. Let's see if he can answer it. Just give us a minute, please, okay?
Yeah.
So just to confirm that 85 crores that you see there is in today's published numbers, right? That is the capital expenditure for the during the last year, including the payments for phase 5.
Okay, so we won't be seeing these big numbers from next year.
No, that includes phase 5 numbers. As we said, the normal capex every year is depending on what the specifics are, but it's anywhere between 10 to 15 crores. If there's a carryover, it could be a little more or a little less, but that's more or less what the level is.
So, assuming even 15 crores, sir, there will be an increase in 70 crore of cash. So, are we willing to distribute that, or we want to stick to a plan of 26 rupees per share? Are we open to increasing it?
So, we won't say anything because we are not sure where that 70 crore number you are getting. So, the short point is that as far as we are concerned, we intend to continue to pay the dividend at the current levels that we have. And that we think is the right level based on the amount of cash we are budgeting or we project to generate in the next year.
Okay.
Just excuse us for not commenting on the 70 because we're not sure how you're getting it. So we don't want to say anything that is incorrect.
I'm talking, we have invested 85 crore, and you mentioned that we spend around 10 to 15 crore, right? So that's why I got the number 70.
No, let's not compare. I know what you're saying. You're subtracting. You're saying that 85 will be 15, so you'll have a surplus of 70. It's not quite that way.
Okay.
The default point is we are trying to pay out as much on the dividend side as we can.
If at all we generate more cash, we are open to like more distributing opportunities also, right?
I won't want to say it in the context that you're saying it because I'm not sure what your calculations are involving exactly. But so I don't want to be discussing a specific number without knowing where exactly you are, or what it includes or doesn't include. So I don't want to make a simplistic assumption to say that 70 crores more which will pay out. That's something we would like to avoid giving any impression on. The point we want to make is that the effort remains to pay out the maximum dividend possible. Right now, what we've paid at this point is something that we intend to and expect to maintain.
Okay. Thank you so much, sir. Thank you. Thank you.
Thank you. The next question is from the line of Forum Gosher, an individual investor. Please go ahead.
Hello, sir. First of all, congratulations on your good set of numbers. So, can you talk a bit about the growth outlook in FY24 and FY25 on revenue and profitability terms, and what is the update on management strategy over here?
Well, right now, with regards to FY24 and FY25, as indicated earlier on the call, the objective is to try to keep the park fully licensed at 100% with the best profile of licensees with appropriate rents. And there are no specific plans for any further growth with regard to construction in the park or anywhere outside the park. No further construction is envisaged at this point, either within NKP or anywhere else. So basically the growth and the focus of the company would be to continue to license at 100% occupancy, zero vacancy to appropriate licensees to get the best quality of cash flow.
Yeah, the growth such as it is will continue to come from increases in rentals for new or for releasing and or escalations from contracted escalations from existing licensees. That would be the top line increase. There might be to some extent an increase or a reduction in the cost because in Q1 of the 22-23 financial year, we had a large one-time cost because of our refinancing. There may be some that was taken in our finance cost, in our interest cost. To that extent, there might be some savings in the current year depending on how the interest rates work out.
Okay, fair enough. I have one more question regarding the dividend. So the company has, given excellent dividend payout. So can similar type of dividend payout will continue?
So we don't want to make any anticipated statement as indicated in some of the other questions and in some of the answers we've given. The company will obviously like to be consistent with regard to the dividend the company has paid, and subject to results, of course, the company would like to continue this trend of being consistent.
We believe we are paying a sustainable dividend, and that's our intention.
Okay, just one more question. Considering acquiring land outside Mumbai is quite cheaper, so any expansion plans other than outside Mumbai?
Not at this point.
Okay. Thank you, sir. That's it from my side. Once again, congratulations, and thank you for considering my question.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1 now. We have the next question from the line of Satinder Singh Bedi from Eon Infotech Investments. Please go ahead.
Thanks for the opportunity. Since there was nobody in the queue, I thought I'd just give it a chance.
Mr. Bedi, I'm sorry to interrupt. Your voice is not clear, sir. Your voice is breaking.
Yeah. Okay. So what is the balance FAR left? You've said that you've used up 2.6, 2.7. So what is the permissible FAR for this property as per the regulations?
I mean, depending on of course, the FSI is based on a lot of factors with regard to the usage. This is ICITS. This is an IT park under government of Maharashtra IT scheme under DOI. It is also based on some other profiles with, for example, the width of the road, etc., etc. But we feel that approximately the FSI should be 5 plus fungible of 35% fungible. So 5 FSI plus 35% fungible could be the total potential FSI of NKP.
Okay, fine.
That is purely theoretical based on payment of significant premiums, etc., etc. Purely theoretical.
Yeah,
Since you're asking a specific theoretical question, just to be very clear.
Yeah, I get it. I get it. And do we do the lease equalization? So I am assuming that in accordance with Ind AS 16, we do the lease equalization. And what is the lease equalization reserve as of 31st March 23?
You're asking the lease equalization reserve under Ind AS, is that your question?
Yes, that's the question. Yeah, that's right.
Okay, let us try and find that answer for you. Give us a minute. You'll have to give us a minute. We're looking for that answer.
Fine. Take all the time. Thank you.
So I suggest we go on to the next question. Once we have that answer, we'll give it to you. We're just looking for that specific number.
Yeah, that's about it from my side. I've already.
Let us come back to you on that. It is under Ind AS. We do have lease equalization, but we need to find that number for you, the specific number.
So sir, okay, this short answer maybe for this moment, so we are doing straight lining. That is for sure.
That is correct.
We do straight lining. Okay. So if we get the answer, fine. Otherwise, sir, I can always write. Thank you.
Sure.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Kunal Sagar from Nirlon Limited for closing comments. Over to you, sir.
Thank you very much for your interest and for the questions. Appreciate your time and look forward to being in touch again.
Thank you very much.
Thank you very much, sir. Thank you, sir.
Thank you very much.
On behalf of Nirlon Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.